Welcome to Real Talk. I'm Peter Pike, a local board-certified real estate attorney, and we're going to talk today about FIRPTA. The Sarasota Manatee area is the state's fourth most popular area for foreign buyers of real estate. At some point in time, those owners are going to sell. When they do, you need to help them understand their obligations under FIRPTA. FIRPTA stands for the Foreign Investment in Real Property Tax Act. Beginning December 31st, 1984, the buyer was required to withhold 10% of the amount realized, which is usually the sales price, from the money paid to the seller and pay it to the IRS. The seller can file their tax return the next year and try to get a refund of any overpayment. In 2016, the rules changed, increasing the amount to be withheld to 15%. A foreign person is someone who is not a U.S. citizen or does not have a green card. If two people own the property and one of them is a citizen but the other is not, FIRPTA will apply to one half of the price. In order to avoid having to pay 15% of the purchase price to the IRS, a foreign seller can apply for a withholding certificate. This means that they are filing a tax return showing the profit they are making from the sale of the property and calculating the actual taxes that will be due. In most cases, this will be significantly less than 15% of the purchase price. I strongly recommend that a foreign seller get started with this process as soon as possible. It can take up to 3 months from the date of filing to get a withholding certificate back. How do you know whether your seller is a U.S. citizen or has a green card? Pull up the property's tax bill. If it's being sent to an address in Canada, and yes, Canada is a foreign country, then it is very likely that FIRPTA will apply. You can also have a script available for your listing pitch that includes information about FIRPTA. For example, I just want to make sure that you are fully protected when you sell. Are you aware of the Foreign Investment in Real Property Tax Act? If you are not a U.S. citizen or do not have a green card, the settlement agent will have to withhold 15% of the purchase price and pay it to the IRS. Do you know whether this applies to you? Be careful as to how much you help your seller with FIRPTA issues. Informing them of the issue and referring them to their tax advisor or to a local accountant that handles these matters is fine. Getting the forms and helping them fill out the forms is not. There is one exemption from the withholding requirement. If the buyer intends to use the property as a home, the sales price is not more than $300,000, and the buyer has definite plans to reside at the property at least half of the time that the property is occupied during each of the first 2 12-month periods following the transfer. Do not rely on this exemption. There's no benefit and there is substantial exposure for liability to the buyer. If the buyer or his family does not occupy the property for half of the time that it is in use, the buyer can be liable for the tax not withheld, penalties, and interest. To avoid liability, the buyer must demonstrate a change of circumstances that the buyer could not have reasonably foreseen or anticipated, which caused the change of plans. I do not think that it would result in many Facebook likes if your buyer had to do this because you allowed them to sign that certification. It is likely that you will be involved in a FIRPTA transaction. The best thing you can do is refer your customer to your favorite real estate attorney or accountant so they can get the advice that they need.